So the last time I held a mic in front of people was in February 2020 when we had our last event. And ever since then, I was waiting for going back. It's really, you don't know how exciting it is to even publish an in-person event for us. So I'm happy to see you all here. And we decided to go back with an event focused on cash management and financing, which is probably one of the highest interest in recent years, I'd say, definitely with the pandemic hit. Wait, I'm going to do something really quick. So for everyone here, you don't have to join, but you need to be. Okay, I have the active approach for events. So for those of you who don't know, I'm Tal. I'm managing partner at Equitech and president at FinTech-Aviv. We have this amazing community which you're part of, and we're going to go back to in-person event. Right now we're in SOK, which is this cool and trendy space for startups. So, I mean, feel free, if you need a space to be, definitely come visit. We have Vika and Vicky. Hi, Vika. Okay, so we were very active in the past year with digital events, but it was important for us to have in person and to see you face to face and have this mingling and networking effect, which is a major part of FinTech-Aviv. So I'm going to start with a short overview about what's going on in the industry, in the SME market. Then we're going to have a keynote by Vcita. Then we're going to have a fireside chat and a panel. And we will keep it light today, so 1 hour, even plus minutes of content, and we'll go from there. So, you know, a lot of people talk about why SME fail, and three main reasons are poor cash management skill, low funding, and optimistic sales approach. So, if you're looking at whether the SMEs are really realizing the importance of cash management solutions, so in a survey conducted in the European market, out of companies who do use cash management solutions, 70% of them are using software for the bank. And we'll get back to that in a second. A quarter is looking for external resources, and 4% are actually developing their own, which I think is not something for an SME to do, but still there are some who choose to do that. In terms of the market size, so in 2019, it was estimated at 10 billion. We see projection of going to 2025 up to $20 billion. And I think it's just the tip of the iceberg, as you'll see in a second. In terms of, you know, what is the market size and what are the four main verticals that we see in cash management? So the top one will be balance and transaction processing. Afterwards, cash flow forecasting, corporate liquidity management, and payable and receivables. Now they're all growing in a similar pace, but it's definitely it's easy to see that the balance and transaction processing is one of the most interesting one. An SME needs a solution that will be holistic, and we'll have Vcita in a second who will tell you a bit more about their holistic approach. In terms of what the market share by the end user, so the banks are pretty much dominating right now the market, but we'll probably see this changing in the next, or we already see this changing with several trends that we'll touch upon in a second. So when we're looking at SME financing, what are the needs and sources of SME financing? And the main ones are, does this work? So the main ones are in bank-related solutions or subsidized loans. Sorry. The main issue, and what you see in this chart, and I'll explain in a sec. So you see in the dark blue represent SME who use this type of financing. In the lighter blue are SMEs who would have used if they had a chance. And in the yellow one, it's not relevant. Now, not relevant, it's not because they don't need it necessarily. It's not relevant because they don't have a way to approach it. And you can see it mostly in equity and debt securities. Now, think about it. SMEs don't really use the equity side. They don't use the debt security side. So this is one element that can be focused on and grow. Another very interesting fact is that factoring is very low. Now, if you'll talk to enterprises, they're utilizing factoring in a very, let's say, broad sense, right? They use factoring. They probably take a bunch of their account payable and move it to a bank and do factoring on it. For SMEs, it's much more complicated because of the high risk, because of the volatility of their operation, and their vendors, most of the time, aren't the, I'd say, the top tier leading vendors that it's easy to provide financing based on the factoring. So this is another realm where innovation can really make a difference for SMEs. So if we will be able to take some, or I think the market is taking some of the bank overdraft and bank loans towards a more progressive, fintech, lighter approach. By the way, this is horrible. Bank overdraft are horrible. It's not a tool that we should be using as an SME to finance and in cash management. This is definitely, if you reach the fact that you're using your overdraft, you miss the point of doing comprehensive financing for your company. So where does fintech come in? Three main trends and we'll summarize in that. So open banking, of course, and how does that come into effect? So the amount of data that SME has is very broad, but it's spread out in different platforms. And right now, with open banking, third-party providers can provide a lot of access to this data, analyze it, and provide insight. This is something that Temenos is focusing on. I'll show you the case study in a second. Second, very important, is a lending platform. So SMEs have trouble in finding financing. Some of them, so last report I saw was 50% were only accepted financing, SMEs who accepted financing from financial institutions. So a lot of them are looking for alternative financing realm. And a lot of marketplaces are now providing tailored, ad hoc, short-term financing. So take, for example, an SME who is oriented on summertime. Okay, this is the main time that they're doing business. They need a lot of money for that particular time. This is when they need the short-term loan to get all the inventory they need and get ready for the high season. This is not something that a bank can or want to evaluate due to the size of the loan that they're requesting, the risk that has to be related to it. So this keeps an open line for the lending platforms to log in and provide a lot of insight and provide a lot of value. Lastly is the smarter digital payments. So SMEs don't have the capabilities of enterprises, which not necessarily are very high tech, but you see more and more requests to pay, for example, for SMEs. So they send this link that allows the customer to pay through a link, or understanding who's the payee, right? When you have your customer, you want to make sure that they're using the most relevant payment method available. Lastly is a really interesting case study by Temenos. They joined forces with the Canadian Western Bank and introduced Temenos Virtual COO. Now this is a global venture, so we can also enjoy it. But for SMEs, basically, they can utilize Temenos' huge amount of data and enormous platform for their own benefit and enjoy a digital advisor for smart decision making. So take off all the hurdles that they had before and now move towards a more progressive approach based on their own data. So I wanted to give you an overview about the SME landscape. I hope you enjoyed it, and if you have questions, I'm here also after. I'm here always, so just reach out. For those of you who don't know, Equitech is working a lot of globally. we used to have a lot of global participants in the crowd, and we actually see interest from financial institutions coming back to Israel. So in the next couple of months, we hope to host BNP Paribas and mBank and JP Morgan and many others. So stay tuned, and I'm very excited to have all of you here. It's unbelievable how refreshing it is. So without further ado, I want to ask Rachel. Rachel Nulman-Schapiro. I hope I pronounced it with it. Yeah. So Rachel is the director of product marketing at Vcita, and she's going to tell you about their platform, what they do, and what's their approach.
Hi. Oh, thank you. Hi, FinTech friends. I need to be camera. So hello. I'm really excited and inspired to be here among people that provide solutions for SMEs. Thank you to everyone who organized, took part in the organizations of this event. My name is Rachel Shapiro. I'm with Vcita, Director of Product Marketing, and I am really excited to share some of what we've learned working with the SME market, especially around payments and providing tools that give them financial security, help them build financial health. So I knew I was going to go backwards first before I went forward, so I just had to get it out of my system. So digitalization. I'm going to talk about the future of SMEs. Actually, I'm going to be talking more about the present of SMEs and the wonderful future they could have, and how everyone in this room, can help them get to that future. So Vcita, established 10 years ago with the goal of bringing digital transformation into the SME space, helping small businesses make the most of the technologies out there. We have about 150 employees across our 2 offices in the US and in Israel, 1.5 million small business registered on our platform, and we love what we do it really well, and I have some insights to share. What I do want to say is that we are 75% partner driven. So we do have a consumer brand, we do sell to the SMEs, but we work a lot with financial partners. So we partner with banks, we partner with financial organizations, we partner with fellow fintechs to provide digital solutions for the SME community. So this is basically what we do in a nutshell. We simplify SMEs day to day. So if you know anyone that owns a small business, you probably know that their day looks like phone calls coming in from people that say things like, hey, can I come in on Monday? Can I come in on Tuesday? Can I reschedule my appointment for 4 o'clock? Can you remind me how much I owe you? Can you resend me that invoice? Can you resend me that payment link? Can you resend me that contract? So they are so overwhelmed by the management of their business, they don't have the bandwidth to focus on providing their actual services or even think about growth. So what we do is we automate everything that happens in the background. We eliminate all the noise, we take care of their payments, we take care of their scheduling, we automate all their most time-consuming tasks so they can focus on doing what they do best. Now here's the thing about what we do. We don't just take an app and throw it on the SMEs and say, here you go, enjoy, have a good time. And we don't just teach them how to use it. I'll press this button, press that button. We teach them how to gain value out of our platform. So we partner with them on their digital journey to help them understand how they can make the most of the tools we are giving them. These are some of the areas we cover. I think today is mostly about payments. So in the payments area, we have solutions around estimate and invoice generation. So with Vcita, you can send an online payable invoice that customers can pay from their mobile phone. We have payment processing. We try to help these SMEs create growth opportunities for themselves. So we create coupons for them, we create loyalty programs, we help them create packages so they can upsell and cross-sell. It's really all about using the payment in the context of the relationship with your customer to generate growth, to generate customer loyalty, create that extra point of engagement. We also help them manage their documents online, their scheduling online, all aspects of business administration managed within one app that they can access from any device. Of course, again, I went back, so this is probably going to happen again, so just bear with me. There's an important part of this story, and this is where you come in. So there's a big opportunity for small businesses, and there is a huge opportunity for financial organizations that cater to the small business community. So here's the thing. There's a catch, because there's always a catch, right? There's always going to be something that stands in your way. We see, and we have seen, and we know that if anyone here sells products to the SME market, this is definitely something you can relate to. Digital adoption within the SME market can be challenging. It's not always seamless. So, people are always a little bit suspicious, what is this? What are you talking about? What is the actual game here? Digitalization as a product, it's not a product. Digitalization to itself is not something you can sell to an SME. It has to be what comes out of digital transformation. What am I going to see on the other line? What is the bottom line? Now look at COVID. COVID, the ultimate accelerator of digital adoption. Suddenly everyone's meeting online, collecting payments online, sending their invoices online, applying for loans online. Everything's happening online. Suddenly, digital transformation meets an actual real need, a concrete need that impacts the business's bottom line, impacts their day-to-day lives. And that's why suddenly so many people finally are able to do this stuff online. Now there's another thing about digital transformation with SMEs. When you start talking to a small business, and I see this on a daily basis, when you pitch a small business with a digital solution, one of the first things they're going to say is, wait a second, I'm a small business. My personal relationships with the people I work with are everything to me. I know their name, I know their kid's name, I know their dog's name. I had to throw in the dog. It's all about the one-on-one connection. So when you start, I should have said the dog joke with the microphone. Anyway, dogs aside, there is a dog here. I did see one. That's why I'm thinking about dogs. When we talk to a small business about automating a process, asking a client to do something online, managing their relationship online, they're going to say, wait a second, I can't lose my competitive edge. My competitive edge, the reason people come to me in a small business and not to the big guys out there is because I know who they are. So what we see actually happens in the real world is that digital transformation, it doesn't hurt the personal relationship. It helps them scale it. When you have a CRM, you're able to remember 4,000 people's dogs' names. You're able to provide personalized service. When someone walks into your clinic or to your office or to your hair salon, you can, with a quick glance at your phone, you know exactly who this person is, how much they owe you, if they owe you any money, how much you've gained from them. Do they have a loyalty package with you? All the information is right there for them to access immediately, and that's something that helps them actually provide even more highly personalized service. Another natural challenge with onboarding into digital solutions with SMEs is about change. No matter how annoying and frustrating it is to work with the more traditional tools, people that are managing their business with pen and paper or a notebook or a spreadsheet, as much as that really drives them crazy, it's what they know. And when you approach them with a new solution or a new tool, they're going to say, wait a second, I have to learn how to use this. I have to teach my staff member to learn how to use this. I have to talk to my customers about paying online or putting their credit card in some app they've never seen before. These are all issues that need to be addressed, and that's why education is such an important part of our onboarding process. So we are super, super excited about education. Of course, Shlomi is going to happen again. We are super, super excited about learning as part of the process, and that's what we do. We don't just throw a solution at our customer. We help them understand the value. We are with them. We are a partner on their digital journey. And here are some insights I brought from the work we do with SMEs, being part of the onboarding process, being part of talking to SMEs about their day-to-day challenges, about the place that payments and invoicing and collection and applying for loans come in their day-to-day interactions. It's just going to be part of the presentation. What can I say? The first thing we've seen work better than anything else is showcasing relatable stories, relatable success stories. People respond best when they see a story about someone that looks like them and talks like them and reminds them of themselves. So Dr. Julie over here, she is a Vcita super user. She's a chiropractor and she loves technology. And when COVID hit, she was hit hard. She lost her entire staff. They all wanted to go home and be with their families. She got a whole lot of phone calls, calling into the clinic, asking, can I reschedule my appointment? Can you meet me online? You know, can I pay my invoice online? What do I do with my bill? All these questions about what do we do next? How do we continue to consume your services in the age of COVID? And she used Vcita to streamline her entire billing process and her entire scheduling process. So she's using everything with one app. She empowered her customers, her patients in this case, to do everything online. Book online, pay online, get their prescription online, meet her online via Zoom. And she became an ambassador of telehealth. And today she actually teaches other doctors how to do telehealth, how to meet and provide healthcare services online, how to bill for them online, how to share documentation online. So Julie is a great example of a success story that we use when we're talking to SMEs from the healthcare space. Building inclusive solutions is about addressing the full market. You know, everybody loves e-commerce. I hope no one here is from e-commerce, because everybody does love, I love e-commerce. Everything I'm wearing today was ordered online, maybe besides these shoes that are way too heavy to come in the mail. But e-commerce, I think we see that is only 20% of retail in 2020. And retail is only 20% of SMEs. So there is a whole universe out there of un-e-commerceable businesses. The service providers, the appointment-based businesses, the people that sell their time for money. These people are underserved. This community needs digital solutions, and that's where we find the opportunity is huge. So being inclusive with the solution also involves talking in a language that people understand. We're all here in this event, we all understand each other. When we speak to our businesses, we try to approach people with different levels of tech savviness. We don't talk to them about the digital products. We talk to them about the bottom line. We talk to them about, you're gonna be able to get your money in the bank, your hard-earned money in the bank, faster, on time, and in full every single time. You're gonna be able to engage your customers, you're gonna be able to better your relationships, build long-term relationships with every single customer you serve. That's what we talk about to them, and that is why people are able to understand the solution. That is why they come to us. Finally, reward. I want to talk about reward, but first I want to talk about our reward, your reward. The byproduct of digitalization for small businesses is data. Everybody loves data. With businesses managing their finances online, our partners are able to offer the right financial product to the right business when they need it more than ever. They're able to track online behavior, they're able to identify trends, they're able to tweak their services according to market trends they see in real time, increase wallet share, they're able to build long-term relationships with their customers, with their SME market customers. So it's not just an opportunistic thing. There really is a lot of value delivered to the SMEs. So it's a win-win-win. And the reason I say win-win-win and not win-win is because the end customer, the person that shops in the little supermarket or goes to get their hair cut or goes to get their kid's ear checked, that person benefits because they can pay online. They can get an invoice sent to their email. They can get a package deal, so they get 8 haircuts for this price of 10. The business wins because they're able to cut back so much of their administrative overhead. They get to be paid faster. They get to spend less time on collection. And the financial players that serve the businesses win as well. So again, the win-win-win, triple win. We're really into building trust. We work with, again, it's not about an opportunistic thing. We help small businesses develop financial resilience, and that's something that everyone in this room benefits from. We rise by lifting others. It's not just a tagline. It's what we live by at Vcita. It's what we wake up to every single morning. We help small businesses develop financial resilience, which is, of course, something financial providers that serve the small business community can benefit from greatly. So we would love to have a conversation about how we can do great things together. Unfortunately, I do have a scheduling conflict, so I'm going to have to head out. But I have my colleagues in the back, Nicole, Gilly, and Irina, and we'd love to talk all things SME and finance. You can check out Vcita.com, Vcita on LinkedIn. I'd love to connect personally on LinkedIn, Rachel Nulman-Schapiro, and let's be in touch. Take care. Enjoy the rest of the event.
Thank you, Rachel. This was great. Wait, I'll put this.
No, that's fine.
Thank you, you were great. I actually talked to people on the ground and they also said that you were great. Thank you for the presentation about Vcita, and definitely we have the team here if you need anything or you want to get some more information about them. Okay, up next we're going to have a fireside chat. I want to invite Saul. Hi, please. Saul is a partner from Shibolet, and Shibolet is a very long-term partner of FinTech-Aviv. That's your mic. And we have also Shlomi. Hi, Shlomi. Shlomi Turgeman from BTB. Shlomi is the general manager at BTB. And I'm not sure that people are familiar with BTB. So start with introducing yourself and then take it from there.
You can sit, stand, whatever you feel comfortable with.
Hello everyone. So I'm Shlomi Turgeman from BTB Bank, which is also a BTB. It's a peer-to-peer platform. It's a lending platform for small and medium businesses. For today, we are working only in Israel. We established in 2014, and we are focused on small and medium businesses here in Israel. We have a very unique process for such businesses, which is digital. They can every small and medium business, it doesn't matter the sector or whatever, can start a process in BTB to apply for a loan. Until today, we gave for loans up to around 1 billion shekels here in Israel. On the other side, the money comes from private investors, Israeli investors. Also we have some investors from abroad, but they have to have Israeli citizenship because of the laundering money, anti-laundering money. And the public earns the interest that those businesses are paying as a peer-to-peer platform. We have only fees, and this way we connect between those small medium businesses and the public as an experts that are that develop the technology to underwrite such small medium businesses in a very short time. This is like in a glance.
Hi, so I'm Saul Aderet. I'm a partner at Shibolet & Co. Law firm. I'm head of FinTech, the FinTech practice and the blockchain practice. I deal mainly with regulation, and I'm happy to say that Shlomi and BTB are our clients for some time now. We're working on some exciting opportunities. Let's say
Very exciting.
Yeah, very exciting. But actually, I want to say that the first time that we met, I don't know if you remember, I came to your office and you were talking to me about how you came up with the idea. Because if I recall correctly, the idea of lending platforms wasn't around in Israel. When you started, there was no regulatory regime for practicing any such a lending platform, which is obviously always interesting for me, at least as a regulatory advisor. So why did you start actually?
So first, my parents had a small medium business. So as one who knew who are those people that are very normative, they give everything to their community, to their kids, to their clients, to their suppliers. They pay tax. That's what worries them. And they work very hard. And I saw that all the resources of the family goes to the small medium business. If it goes up, so it's good for us. It's wealth. But if it goes down, we all of us have to work there. And the banks, they go with you only when you go up. They see only the numbers, but they don't see the person. But every small medium business have a family and a person, and they have to have a different treatment from incumbent institutions or other financial institutions, because I think that they, on the other side, it's very easy to say, they run the economy. It's not Apple, Google, Amazon, and other companies. 54% of the economy comes from small medium businesses. If you were walking in the street during the Corona time and you saw small medium businesses were closed, I think it was very sad to walk on the street. So I thought to myself, how can it be that there is such a credit crunch for those people that are seeking for money? And you could see public companies raising money for such a small interest, doing with the money whatever they wanted, having haircuts for their, in bonds where took two haircuts, and people lost money. And there's a regulation of, securities regulation. If you just stand the regulation, you can do whatever you want and you can raise money because you were ranked and it's public. That's it. But small, medium business, you have to explain who are you, what is your sector. You have to collateralize all your assets. So I thought with my partner, Alon Katz, we thought together, and he is also a son of people that had a small, medium business. So we together thought, why not to change this reality? Why not to come with a different behavior to those entrepreneurs? Why not thinking about them? Why not being experts about how to lend them? Why not learning how to learn about them in a very short term? So we offer very big loans to those small medium businesses. If you were walking to the bank, whatever relationship you had with the bank a few years ago, also today, and you just have small medium business, which your revenues, the turnover of 1 year would be, let's say, 3 million shekels, and you would apply for 1 million shekel loans. You can say that it's for growth or inventory or whatever. I think that the bank would ask, what can you collateralize? Do you have any deposits here? Maybe you collateralize your home. If you don't, for sure you did it before. You took whatever you could from the bank. It was small money, and on the other hand, big collaterals. And then the bank would say, I'm so sorry, this amount I never heard. I can't give you such a huge amount, which is 500,000 shekels, 600,000 shekels, 1 million shekels, with no collaterals or small collaterals. So that's what I can give you. That created that credit crunch, and that limits the growth of those small, medium businesses, and also the economy. It affects the economy. So we thought that this sector of people is the most normative people that want to prove they have their reputation. It's their reputation. If they succeed, it's their honor. This is what they wake up with. This is what they're going to sleep with. So why not to understand their needs? Why not to trust them and give them the money? So we started with this. And as Charles said, there was no regulation during those days. And the non-bank companies which were offering loans here in Israel were the gray market, they called it in Israel, which is not a legitimate market because the interest was very high, I think around 20%, maybe more. And they collected the debts not through court, I would say, in those days. So being such a company, you have to prove first where do you bring the money from. Second, how maybe it's very dangerous to have a contract with you and to give you my signature. It was very hard to convince small medium businesses to come to take these loans. So we thought, why not to create regulation? Then there was a Strum reform here in Israel, reform that its meaning was to promote the competition and to offer like alternatives to banks. So it was a precise time for us. Moshe Kahlon was the Minister of Finance here in Israel, and he was very open to our ideas. So we just brought the materials from the UK and the US, and we wrote the law about our activity. And that became a law into 2018. We are regulated here in Israel, and we have a license. And the whole non-banks market, I think there is a big reform regarding tech. Everyone has to have a license. On 2014, when we started, there was no license. And we are unique in our also technology and behavior. But I'll let Shaul speak and ask, and maybe you also. I can talk. I have 7 years of way to speak.
Sure. So actually, I want to talk about two different things here. First of all, because the crowd here comes from fintech. So fintech is, and we heard it before, fintech is a solution. It's a solution for SMEs, and it's a solution for lending problems and for money transferring problems and many other issues. And we know we have many fintechs here in Israel, but the fintech companies themselves are perceived by the banks as a problem. I have many clients that come through our office, and they have a real issue in opening a bank account, in transferring money, in paying their employees, in receiving money from abroad. And that's before I even talk about blockchain companies, which is the forbidden word here. And I know that you see everyone as an opportunity. So what's the difference? How is it that you can provide the lending that banks can't?
First, I totally agree with what you just said. I think that you described the reality. But Israel is very different from Western countries, like UK and the US and others, which are the banks there is a competition between banks, of course, in America and also in the UK. Many big banks, small banks, different banks, unique banks, many names of them. There are banks with just like 1 or 2 or 3 branches. And here in Israel, we have only 6 groups that are controlling our banking system. There was no competition during the years until last year with the digital bank. I think that we had almost 45 years with no new license for a bank here in Israel. And the Israeli bank, we also have to ask ourselves why foreign banks never perform here in Israel. Maybe Credit Suisse and HSBC have small agencies here in Israel for their clients, but they don't have a bank activity here in Israel. They never applied for a bank license here in Israel. Because the Israeli banks are very strong and they prevent competition. This is the situation. They know that the aim of the fintech companies is a huge aim. It can just banish them and harm their activity and portion in the market. So I think that first they just don't open bank accounts in the company. We are a regulated company, we are with a license, so this helped us to open bank account, but it was very hard for us. And I must say that also today we can work only with Bank Leumi. Other banks are very polite, so they say, okay, we are willing to see if we can open a bank account for BTB. So they are asking for documents and more documents and more documents. We are like, with bank, one of the banks, I think 9 months, we're trying to open account there. It's just a game for us. We're not serious because we work very well with Bank Leumi. So I think if this is the situation with us, and we have very good connections with the parliament here in Israel and the other regulators that are helping us when we need it. So think about small fintech company that was just established and it needs to get money, to get some funds from people. They don't open accounts for fintech companies because of the competition. I think it's it's just my thoughts. I'm not sure that everyone would agree, but to my opinion, what banks are doing in the last years, they are screening the fintech arena. And once a fintech company comes to the bank to open an account, they ask him in a very detailed way, what do you do? And there is a strategic company, maybe you got some phone calls from them, they invite you for a meeting, and they have their incubators for fintechs, and they can recruit you to that incubator, and then they will maybe offer you to use your technology for the bank. If not, they wouldn't open the account. So I can't help you with opening account, but for sure they won't give you loans. Because banks don't work for people, they work for the banks. So they will never think about the entrepreneur or the small medium business, they will think about sector, about statistics, about minimizing the risk. So once you're not in the profile of sector statistics and minimizing the risk, and on the other way you are a competitor, they will not open you a bank account, and for sure will not give you a loan, will not offer a loan, for sure will not give it to you. What we can do, we are focusing on the people. So if you don't have bank account, we can give the loan to the entrepreneurs in a personal way. But we have the technology and the behavior to check your the way that you did in your business and your business parameters, and also we are checking the person as a person. And once we have the results for that, we can offer a loan. We do it within 3 days. I think that there is no bank that is willing to offer loans in such a short term of relationship. I think that this is what's unique with the fintechs. They came to solve many problems. Every fintech company is solving a different problem in the new financial world. When I was sitting in like this panels or talks 6-7 years ago, people, especially banks, were telling me, "You're crazy. You are offering loans with no collaterals for 6 years." 6 years is a huge term. It's a very long term, and offering such a high amounts with no collaterals, it's not reliable. Our answer was always, if you will continue to talk about inefficiency and about the old economy, then it's fine. But the way banks think is not the way we think, and also fintech arena. So I think that every fintech company is thinking about a client, a sector, a special solution, and it's very easy to speak with those companies because the entrepreneurs are still there. There is no, there is a very long way between the clerk of the bank and the CEO of the bank. In fintech companies, this way is very short because our secretary, employee, whatever, even the cleaner, everyone is just 2 meters, 20 meters from my room. So everyone can speak with me and alone, and everyone can raise any idea, and we can give, and we are developing, and we like to find a new solution for every new problem that is arising. So this is the difference between institutional incumbents and banks that are so traditional, and they have heavy regulation, and they are also trying to justify their nose with heavy regulation. But when they want to give a very big loan to an Israeli tycoon, they can do it with no regulation or in the way that they think. Try to be short.
Yeah, thank you very much. I think we're out of time. I think it would have been interesting also to talk about, growing your own regulation and working this in, again, a room full of fintech people, so they understand they will need to work into rule, sometimes rigorous regulation, sometimes a regulator that is still not sure what the regulation is. So I think there's much to hear from you. We'll do it next time, I guess. Thank you.
Thank you very much.
Well, first, thank you, Shaul and Shlomi. And Shlomi, you gave us so much to talk about. Okay, so thank you very much, Shlomi, and thank you, Shaul, for this inspiring session. And truly, B2B, we've been known them for a very long time, and it's amazing what they've done in the market so far, focusing on SMEs in the Israeli market. So I want to jump to our panel session, and I would like to invite Ami Isakov. Ami, please join us. Ami is the head of FinTech Innovation. Yeah, you can do that. And we have Dr. Yigal Menashe from Bank of Israel, senior economist. We have Saul Kramer. Saul, hi. So Saul is the co-founder and chief underwriting in USA Mortgages. But Yigal, sit in your. I built this in a designated space. And Itamar Nevo Hi, Itamar. Itamar, Director of Financial Services Industry in Deloitte. It's working. Oh. So, what we're going to do, we're going to have a short round of introduction, and then we're going to dive in. But before, I want to hear, Ami, your response to Shlomi. There were some fierce accusation against financial institution, and we've been in touch and working for a very long period of time, and what is your approach to the market and fintech? So I'd love, before we start, 2 minutes, just talk about what you think, and then please, and start with an introduction, of course.
Hi everyone, I'm from FIBI Bank, head of FinTech and Innovation. We collaborate with a lot of fintechs, that's what I do, and we open bank accounts with fintechs as well, and we embrace fintechs. So there are parts of organizations or fintechs that it's more problematic for opening bank accounts. That is true, and it's more difficult, but we definitely focus on bringing innovation, external innovation to the bank in various areas. And we also understand that SMEs have issues sometimes obtaining credit, and maybe we'll talk about that later, how we see our position in providing credit to SMEs. We do understand that it's part of risk management, and banks are more conservative, and SMEs, it's more difficult to obtain reliable data. And I think there is space for companies like Be the Bank, Tarya, and Lending Club. There are many other organizations that provide credit to companies that have more difficulties than to obtain the credit from banks, because the easiest way to go to a bank and obtain credit, but that's not always available because the banks don't always have those processes for the underwriting. And not always willing to take the risk, but banks are also moving forward in that direction. So I don't think that the world will stagnate around that.
Thanks. So please, we have only 2 mics, so we'll try to play with it.
Okay, so I'm Yigal, so I work in the Center Credit Register in the Bank of Israel, and my task is to oversight the credit model, credit score model, a consumer credit model, mainly on the credit bureau, but also in many credit providers.
Thank you, everyone. Saul Kramer, I'm one of the co-founders of USA Mortgages. We're a fintech lending platform. We're not in the SME space. We're providing mortgages to foreigners. So everyone here sitting in the room, any of you want to buy a property in America today, an American bank doesn't know how to look at you and your credit. You don't have FICO score, you don't have credit history. Even if you are an American and you're living here and your earnings are here, it is also very difficult. We're solving that through doing underwriting on foreign investors in their home country using open banking, credit bureaus, many other data sources, and also doing the underwriting on the property in the US. It's a huge market. Many foreign nationals buy property there as investments. And it's a niche market, and we're attacking that market, and it's a lot of fun.
Thank you. So I'm Itamar Nevo from Deloitte, Israel, from Monitor Deloitte, which is a strategy consulting area in Deloitte. And what we do, what I do, I help organizations, mostly traditional organizations, to shape their strategy, to shape their business models, to prepare for the changes in the marketplace, and to be relevant in the future. And also we work with newcomers and attackers to find their market, to find their segments. And what we do under the Catalyst activity in the past few years is trying to also match between both sides, understanding the issues in the market, understanding the incumbents' point of view and attackers' point of view and fintech's point of view, and try to be in the middle of this ecosystem and bring value to all sides.
Okay, so I don't need a mic. If you have one mic, one mic, everybody hears me, I believe, and I'll talk loudly enough.
So, Yigal, actually, I want to start with you and Saul, because credit scoring in general is not something that's familiar in Israel. And you mentioned that in Vcita. So, are we going toward that way? Towards having a credit scoring system in Israel for consumers?
We're already there.
We're already there. Okay, so anyone here knows their credit number? Credit score?
No.
Yeah? No. I don't know mine, if you can help me. So
That's why we need the FinTech.
Good. So tell us a little bit, what exactly is the personal or the customer credit score?
So, I don't know if you're familiar with the Israeli credit market, but in Israel for many years, the credit market is highly concentrated in the banking sector, especially in the two large banks. And of course, that caused a problem. There is lack of competition, and we pay much higher interest rate that we should pay. By the way, almost more than 80% of the Israeli customers have very good or very good score, and you can see that we pay much more than we should pay. That's why Israel, now I speak Israel as a public entity, not as understand that it's not a problem that we should have more credit providers, but we should solve the asymmetric information that that only your bank know exactly your credit history and other credit providers maybe not know really about it. And that's why we passed the law in 2016 and it became effective in the last 2 years. That mainly we create central credit data within the Bank of Israel, not in the private entity. That's something unique. In the US, it's in private credit bureau. And then, of course, if the customer give consent, we can share its data through the credit bureau to the credit providers, and you can get also the credit score from the credit providers, and that could make a huge difference. It's only start. You see that not everyone is aware about this credit score, and that's one thing. But I think the second thing that we in the Bank of Israel really want to emphasize on that is that it also save or reduce the asymmetry between lenders and borrowers, between we as a customer to the credit provider. Why? Because now it's very easy to download your credit report as a customer from the website of the Bank of Israel, and you could get easily your credit score in the app, and then you can realize what is your financial situation, and you can work to improve it, regardless of any credit transaction. And of course, there is a room to a lot of, to a lot of things that simplifies this huge data and the score in a very simple way that the average, Mr. Mizrahi, I don't know how to say the name, the average customer will know whether you need to have a credit and what is the precise time to do so.
I mean, do you use this as a bank? I mean, utilize the personal credit score system?
So we're starting to use it now, and that's part of the improvements within the banking system. So it's using more data to create better offerings for our customers, and that would be an additional point of data for the banks to provide credit faster and better rates as well. So that's a good thing that we'll be having access to additional external information that we did not use until now. And I'm sure that there are a lot of solutions that use additional external information, and it's not only from the credit bureau, but coming from kind of alternative data sources on the performance of businesses, on the activity of customers. That's how alternative lending actually works, because they have algorithms that are linked to their credit risk. But the credit bureau that has been established is pinpointed on the ability to at the end of the day, return loans. And that's why that information will be so helpful for the entire banking system. And we are definitely starting to use it right now, these days.
So I think, so for you, for example, you have a customer who wants to have a mortgage in the US. They can't apply because the credit is really unique. And if you don't know the US credit score system, if you're not a US citizen, then it's almost impossible for you to get any financing. And you need these alternatives. So there are a lot of fintechs that provide alternative lending and their financing. So will this tool be feasible and usable?
So absolutely, and I'll give an example that will tie in quite nicely, because number one, we're asset-backed lending, so that's also, there's an advantage to doing that also. But a great example, now we're dealing with international people, not only just Israelis, but I'll give a great example that ties into what we said here, is we very much rely on the credit report, that anyone here can go onto the Bank of Israel's website and download it themselves. There might not be a score, but there's all your credit history for the last 3-4 years, whether you've missed a credit card payment, direct debit, all of that. Now when we're doing our underwriting, something that we pick up a lot is in the credit, for example, and this is where the fintech advantage comes in, is we saw an Israeli guy, we're giving him a mortgage on his home in Florida, and we see that his overdraft in his bank account here in Israel at a bank of Palim, he's got a 50,000 shekel overdraft that he's used, and he's paying 12% for it, and he didn't even know that. A lot of people go into overdraft, you don't know what you're paying. So as a fintech company, we can say to him, take another $10,000 on your property in Florida. We've got the ability to underwrite that. We know the income it's generating. We know the valuation also at the push of a button. And we can help him, create this cross-border opportunity which is really at the core of what we're doing, is trying to help people improve their financial well-being. And that's at the core of everything we do. The customer is part of the journey from A to B, and if we're not doing that, essentially, I think that's where a lot of the missed opportunities are between for the banks today. And that's what but we work very much with the banks as partners on the lending side.
I want to approach Itamar. So here's a question. Let's say that there is a credit score that you can use, okay? And now we're going towards open banking and we'll have a government. So putting all this together with the fintechs that you're working with, do you see a better engagement? Because Israel, for most of fintechs, isn't an addressable market. But with these changes, do you think it will be more relevant for them to approach and provide financing or SME solutions based on the data, the new data, like the Israeli as a market and not solely as a place to start from?
Yeah, so Israel is a market is a complex question for fintechs and for global players that want to serve global use cases. And what you asked, if we close the gap in regulations and in credit scoring and open banking from other domestics, will it attract more solutions to come to us? So I think that the complexity for global players in the Israeli market is coming from the regulation and the structural structure of the market, but not only the Israeli market is different in behaviors, in culture, and other areas. So for sure it can promote more fintech players and more global players, and also Israeli players coming from the fintech industry to try and start with the Israeli market as the first base, but still it won't solve the size and the other differences. So the Israeli market has a unique situation that it has the privilege to see what's happening abroad before it coming to Israel, and to prepare. And in the open banking, you mentioned the government and the law. The problem is the law that hasn't passed. But for the banks, it's already existing because the Bank of Israel took care of it. So it provides the Israeli banks or the banking system more time to prepare. So the more time the local ecosystem will have to prepare, we're going to see the changes coming from within the market and not from external players that come to the market.
So I tend to agree. I only want to add that I think the complexity of the regulation in Israel and the really density of the financial institution make it not that interesting or applicable market. Take Vcita, for example. Okay, it's a great solution, but they're not going to focus on the Israeli market. They haven't focused on the Israeli market at all, whereas they have operation here. It seems that it's only logic that it's very easy for them to be here. They're already present. They're physically here. So why not? But I'm putting this aside because it's not the topic of our conversation, but we kind of moved into it. But I want to talk about the SME landscape and financing for SMEs. So how do you see the involvement of SME financing in Israel? So cash management solutions globally are very broad. Right? They're different for many, if it's for expenses or managing your customers or payables. How do you see the need, first of all, in Israel? And do you see a competition, maybe not a competition, but external, international players moving into this market, or local solutions evolving here? I can go on, but
Maybe I can start.
Yeah, sure.
So your question is very good because I think that there are some major shifts in the market that will eventually open the competition, and small businesses are traditionally underserved, like AMI reflected and BTB reflected. It's not only from this perspective. They are stuck in the middle in somehow to the traditional banking model, and they are too complex to be served as a retail. The banks are very easily automated the retail operations and the retail credit scoring and everything, and it's not large enough or appealing enough in order to deal with the expertise that going to the middle market banking and to the large corporations. So in that manner, the solution will not come only from risk perspective. It will be, I think, a combination of data, open the banking data to other players. It's a first step. What we see abroad is a lot of uses of external data, ERP data, the business management systems that and so the player will know how to deal with the data in the most effective way, most value-added way. Will have an advantage also on the banks and the traditional players. And the other aspect is, I think it's collaborations and ecosystems, coming from the data perspective, also from distribution perspective. The open banking and changes in the marketplace are forcing new banking models, such as banking as a service or embedded banking, that we see the very, very beginning signs for them also in the Israeli market. So it's much more interesting collaboration between banks and companies that will provide the infrastructure and other organization providers that has other relationship with the businesses, such as ERP providers or platforms that the businesses are engaging with. So they will have to and probably do a combined solution in collaboration. So I think
I mean, and when you answer, if you can share, how many of the SME application are you accepting in terms of financing application?
I don't know.
Okay.
That's not part of what I do, but I'll touch a few of your points. First of all, open banking in Israel will be around mainly aggregation of data and payments, at least at the near future. So that won't change the landscape dramatically. At least we don't think so, not in the near future. We'll be aggregating data mainly for private people, the retail. As to the market, if it's worthwhile working in the Israeli market for fintechs, that's a great question, and the answer is usually, well, the market in Israel is really small. So sometimes it doesn't make sense to start in Israel and then try to migrate the company focus somewhere else geographically. That sometimes you need so much effort to start a new geography or localize your product, and that really depends on the company. So if they can use Israel as a kind of a jumping board overseas, that's sometimes what will happen. Many times startups and fintechs will start in the geography they think their market is there. It's UK or US. So not always Israel is a good place to start in. It really does depend. Regulations are different. As to cash management solutions, we as banks embrace them for SMEs because we want our SMEs to be stable businesses and manage their cash management properly. There are already solutions in Israel, and they're for SMEs. For larger organizations, also some of the banks provide those kind of solutions, but they're not very popular because business will not necessarily want a bank to manage their cash management or provide a tool, because usually businesses have more than one bank account, and most businesses would want to have that information theirs and not managed by a bank. It's not as banks do not promote these kind of tools, but I think there are more chances that banks will start using or collaborate with third-party vendors to provide a cash management solution. So it won't necessarily be provided by the bank, but maybe recommended by the bank. I think that will be happening more, and those solutions help the banks as well that collaborate with them to get better data. Also on alternative banks, not only a credit score, because at the end of the day, a bank also generates a credit scoring for a customer to provide a loan and what interest, and additional data with customer consent will provide the bank to provide better credit for those customers or more credit. So cash management is definitely part of that ecosystem of gaining more data from alternative resources as well, understand better how those businesses are managing their businesses on cash flow perspective, which is extremely important for a bank, in addition to the additional information that is coming. So those type of solutions will be used much more as we go ahead by third parties.
We added some flavor about the credit score, and we kind of running out of time, and I don't want to rush. But I want to ask you one very important thing. If you can give some of your tips and tricks for fintechs, from your each designated point, what will be, the challenge that you think can be interesting for them to approach, or something that the market might be oversighted and it's definitely good to focus on. You each have very unique point of view in your industries, so we'd love if you can share. Maybe.
I think, as I mentioned before, my tip is to work with the client, with the customer, not only with the credit providers. Of course, the money, you think it's more in the credit provider side, but I think your passion should go to the client, and maybe you will get some money from there. And it's a really challenge to centralize this credit data, this credit score to the average customer. And if FinTech will help us, it will make a huge impact for me.
Okay.
This is my
I hope that a lot of fintechs who are providing services in Israel will utilize it to provide a more specific value proposition. So we'll see, and we'll get to them now. Saul?
Yeah, so very briefly, I always laugh and joke that we live in a country where sometimes a bank still asks you to send them a fax, yet we know how to intercept a missile flying in the middle of the air and know exactly where it's going to land. So I think the tips and tricks is to find opportunities and there exist many opportunities. I think regulation creates opportunity. I think we look how to, we look beyond that, how we can solve that regulation and look for the opportunities there in cross-border transactions, which we're very involved in dealing with different countries where we see Israel as a very big opportunity. We're dealing with the end client because Israelis own tens of billions of dollars of property in the US. So it's a big opportunity for us, like same as Germany and England and India and the rest of the world. And there's opportunities where there's language barriers, where there's cultural barriers, where there's regulatory barriers. That's where the opportunities are for fintechs to find and explore.
I love that approach of RegTech. I think people see it as a hurdle where it can be a huge revenue stream for companies. So I totally relate to that. Ani or Jamal?
My best recommendation is really to understand the market you're trying to provide a solution in. FinTech is a very broad field. It can be B2B, it can be B2C. You have to really understand it because it really is complex and it involves many, many different players. So before you start a journey, understand where you're going, understand the pain points, and try to really solve those pain points properly when understanding the market and not just going for a journey you don't really know where you're starting and ending.
I think that focus should be on pain points or needs, much more than on prices or the traditional value ingredients. Understanding the needs, understanding what, for example, in the SMEs, what's the owner, the entrepreneur is looking to achieve. So this is much more important than being cheaper in 0.5% in the interest rate. So I think that finding the need, and try to understand how you solve it in the most impactful way. And if you have good things, you have I think large potential. And another tip, I think that the banks are now more than ever open for collaboration and opening themselves, understanding that they not solve the whole problem by themselves. I think so. The usual dream is to replace the bank, to change the industry. Now there are much more areas of collaboration that can shorten time to market and be much more effective.
I'll just say one additional tip for fintechs. They do want to work with banks. Banks want to collaborate. Okay, it's not that banks are afraid of fintechs. Banks understand that that's part of the ecosystem. But collaborating with fintechs is difficult. And try to think how to minimize the pain of a big financial institution to collaborate with a fintech, how to integrate into banking systems, how to eliminate integration efforts. All of those will make it much easier for those fintechs that want to collaborate with banks. So try to think of that in your strategy when talking to financial institutions.
Okay. Ami, Yigal, Saul, Itamar, thank you very much for joining us. It's been lovely. Thanks. Okay.
This? Yeah. So this actually summarizes our content session for today. Thank you all for joining us, and you really invite you to talk to everybody here about FinTech. So thank you very much. We're going to have the next event in July, so stay tuned. We're going to pump up back all the live event and in-person event and host all the delegations, and it'll be back to, let's say, previous FinTech activity in no time. I think one last remark, from my point of view, I think the Israeli market is so interesting in a way that all the stakeholders are very active. So we have the investors, and you have the financial institutions and regulators and fintechs and market awareness and community and education. They're all surrounding fintech in a very I'd say concise environment. I think it's one of the best places to innovate for finance and build fintech solutions. So really invite all of you, if you need any help, approach myself or anyone from our team. Please do so, and we'll love to assist. So thank you all for coming, and let's all get some wine and some whatever food leftovers we have. So thank you very much, everybody.